Japan Market Daily. The first correction today is important. The completed July 9th session was not another down day for the Nikkei. The index closed at 67,743.85, up 1.384% from July 8th. That changes the story. The useful question is whether the rebound marks the beginning of stabilization after a sharp sell-off, or whether it was simply a temporary bounce inside a volatile decline. The gain recovered part of the previous session's loss of roughly 2.1%. It was meaningful, but one rebound does not establish a new uptrend. Investors still need evidence that buyers can hold the market above the July 9th close. Currency conditions remain difficult. Dollar yen stayed near 162. The latest daily observation showed a small move toward a stronger yen, but the level remains historically weak enough to keep intervention risk and imported inflation in focus. The more distinctive theme is the competition between bonds and equities. Higher Japanese yields have made yen-denominated bonds investable again. Fund managers can now offer domestic fixed income as a return opportunity rather than only a defensive allocation. That raises the hurdle for stocks. Japanese equities can no longer depend only on the familiar argument that a weak yen lifts exporters' overseas earnings. Companies must also offer earnings quality, pricing power, and efficient use of capital. This makes the rebound potentially selective. Financial companies may benefit from higher domestic rates, while expensive or rate-sensitive shares face more valuation pressure. Our stock to watch is Mitsubishi UFJ Financial Group. MUFG sits directly between the opportunity and the risk. Higher rates can support net interest income and increase the value of a strong deposit base. Fast yield moves can also create volatility in bond portfolios, credit demand, and funding conditions. There was no single company-specific headline in the collected news strong enough to explain the whole session. MUFG is the lens because its performance can tell us whether the market views higher yields as profitable normalization or as balance sheet stress. Three signals matter next. First, can the Nikkei hold above its July 9th close? Second, can the yen stabilize without direct intervention? Third, do bank shares outperform the broad market? If all three improve, the rebound has a stronger foundation. If the index gives back the gain and financials weaken, the move was more likely short covering than durable rotation. The completed session was positive. The next step is to determine whether that positivity can survive a market where bonds are once again competing seriously for investor capital.